Morning, welcome to this video. Let me know if you like this format using the iPhone as the camera instead of the computer. I think it makes it a little bit more homely and inviting and engaging. So let me know if you think that is true. I'm also just going to try and do a very brief update. This is not a full video, but I wanted to let you know what I'm doing with natural gas and a couple of other things. There were some moves in the market yesterday, and let's start with natural gas. Now, if you're following me on X, and I encourage you to do so, you'll have noticed that I've taken some profit at this level here, exactly where this round circle is. I had quite a big position on this. I'm willing to buy dips down to about 2.2 or 2.4. I'm not sure if we'll get there though. This is an important rejection point here, and we did form a spike low after this last candle. That trend line there formed support, as did the 20 and the 50 period moving averages, and the 100 actually just below that on this 4-hour chart. So we're still long, but a reduced position size, willing to add if we drop, but target's 3.4, maybe 3.5675, somewhere around there. On the day chart, you'll probably recall this, which I put up yesterday, and there's this triangle, which we're now edging up towards the top of. We got to the bottom of the triangle. Let's see if we can just zoom in here. I'll talk about the red lines shortly. So we're trying the top of the triangle now. This is a pennant. It's a bullish flag pennant. And normally the length of this flagpole, which is the distance from the bottom to where this pattern starts, is likely to be equal to the size of the following rally. That would take us up to 3.8. I'm not sure if we'll get that far, but we'll probably get up to around about 3.4. That's this recent high. Just above there is 3.64, the previous recent high. And then above there, we've got 3.75, which is sort of my ultimate ending point for this current move. Not to say it couldn't go higher, but it probably will pull back from somewhere nearby. So I'm just watching this very carefully. I want to see how this works out right here. I've still got a decent position on 50% of what I had, which was already quite a big position. So we've taken some profit. We had positions from 2.55, 2.65, and about 2.75. So I've now taken profit on half of that position, and I've still got a decent size on it, really. Not the biggest size, but quite good. Now, having a look at natural gas over at Oanda, also a bullish pattern. This is the 4-hour chart. Pretty similar to this day chart up here in that we've got this pennant triangle formation, but on this chart, we've actually broken out through it already. Remember that this instrument is not the futures, it's a combination of the cash spot price and the front month and 2 subsequent months. I think I've now settled on that as the general idea of how Oanda prices. A continuous price, there are no rollover gaps, so it's easier to trade. And also you can trade this at Oanda with a much smaller position, a minute position if you want to, so there's no problem with position sizing like you might have with the futures. WTI, I'm looking to short. I'm not sure if we'll get up into that gap though, and not all charts show this gap. This is the OPEC plus gap after their comments regarding supply, and I kind of think we could get up into there, but we haven't done so far. The bottom of the gap's at about 75, and the top of the gap's at about 77, 76.5, 77. That's the area that I'm looking to short into. Perhaps we'll get up to these moving averages, the 50, 100, 200, one of these moving averages, and then we'll be looking to short WTI for move down. And then URA, UEC moving down. I'm not too worried about these, to be honest. They're just sort of consolidating. This looks like a bull rectangle on UEC. We got in at the bottom of the rectangle. We're now testing the 200 period moving average on this day chart. I'm hoping that we'll move up from here. But if we don't, we'll continue to buy little dips on this, and I think it's just going to edge up slowly, incrementally and in a choppy fashion. Same thing on URA, although we're holding inside this channel, so looking a little stronger perhaps than UEC. I'm not ruling out a test below the bottom of the channel to the 200 period moving average and into this order block, and perhaps to this longer term trend line right down here, and that could be as low as 26, 27, somewhere around there. We're currently at 30.8. Right, Bitcoin. I've taken some size off Bitcoin, looking to buy further dips. I still think we could get up to $104 on Bitcoin, but we may need some chopping around and pullbacks. Now, the ECB is making the interest rate announcement about 2 hours from now. It's widely expected that they'll reduce the short-term borrowing rate by 0.25%, and that may be priced in already. So we could see a sharp rise in the euro or a sharp dip in the euro, depending on whether the markets price this in. I don't think there's going to be much movement, actually. I think it's already probably priced in, and it's widely expected, and it's not a big adjustment expected. But that might affect Bitcoin and gold and stocks and all sorts of things, probably will, and we'll have to be cognizant of the fact that this market could go a little crazy, hence my reason for reducing some size on some of my positions and taking some profit. Now, NASDAQ, we've just gone short a tiny bit. We're incrementally adding shorts into NASDAQ. I don't know how far this is going to go. I did put a tweet up yesterday on X, and here's the channel center line, and I think that's a good target. That's at about 19,300, and we did get as high as 19,090 yesterday, or late yesterday. So I don't know. I think we could edge up a little higher, but I think we're starting to run out of gas here, and particularly the fact that the ECB is probably going to cut interest rates, may have a psychological effect on those trading the dollar and stocks and so on. As we know, when the central banks begin to cut rates, we know that shortly thereafter, maybe a month or so, maybe weeks in some cases, the markets begin to tank, drop off dramatically. The reason the central banks cut rates normally is because they have to, because there's an economic problem and there are signals coming out already in the jobs market and industrial production and so on that we may be entering a period of a little bit of trouble. So we just have to be aware that when central banks begin to cut rates, things get a little bit crazy, a little bit nuts. We've got the ECB today, and then next week we've got the Fed. So anything's possible, really. Everything's up for grabs. So we're playing pretty cautiously right now, and we'll see how we go. And then going across to currencies, well, we're short on the dollar yen and the euro yen now. We entered a position yesterday on the euro yen right near the top here. Well, just about where we are at the moment. And then the dollar yen, well, we did have a big move down. We've moved back up again. We've come up to the moving averages and the Fibonacci retracement levels. And I think we're going to hold here. There's the 100-period moving average. We're above the 20 and the 200. But we've spiked up against the 100 3 times now, almost a triple top. If this moves lower, breaks this low, and then breaks this low, that will be a short-term triple top and pretty good for the downside. I can still add a little bit more to my short position here. It's not fully exposed, but I'm not willing to do that until we get a dramatic move one way or the other. Same thing with euro yen. We've retraced back into the moving averages. There's the 50, the 20, and the 100. We're stuck in that moving average cluster right now, and we've also retraced by about 61.8%. Let me draw Fibonacci in here. A little bit more than 61.8%. We almost got to the 786, but not quite. So halfway in between, but we got stopped by this moving average. So we're short on euro yen, that's a small position, and we're short on dollar yen as well. And well, it's all going to sort of come out in the wash, as they say, as we see these central banks start to make cuts. And also the statements that they make. Now, don't worry about the cuts too much because I think that's pretty much baked in. But the comments in the news sections after the announcements of the interest rates about half an hour later, made by people like Jerome Powell and Christine Lagarde, will influence the market probably more than the actual number, than the actual cut or no cut. So be very aware of that. And if you are trading based on fundamentals, interest rate cuts and so on, rather wait for half an hour after the announcement and listen to what they've got to say before you place your trades. So the dollar index adds a little bit of strength to that argument, moving down a little bit. There's my original arrow from weeks ago. We haven't quite followed that path, but we're heading down now. And we are below all 4 moving averages. There's a 50, 20, 100, 200, all here. And we're below this Fibonacci support level. We had a significant move down, broke the support. We're now testing this next support here. And with a bit of luck, we'll push through there, back down to the bottom of the channel, and then begin to move lower. So if the dollar does move lower, we should see the dollar yen moving down and the euro moving up. I think that's contrary to what most people think, but we'll see how this works out. Let's have a last look at natural gas, moving up again quite nicely. So if we do move up from here up to about 3.4, I'll still make a decent profit on this trade. But it's not a full position, remember that, and I'll be looking to add if we get any dips. And possibly if we close above 2.76 on a 4-hour candle basis, I might consider adding a wee bit more to sort of top up what I took off earlier. And I think that's it, folks. So a fairly brief overview of what's going on. But if you enjoyed this video and you'd like to see more, your subscribe, like, and share would be fantastic. And I'll see you in the next one. Take care.